All right. Today is Tuesday, June 16th. We're going to do a recap. Mic check. Mic check. Yeah, my mic's on. Good. Let's do a little replay. I basically missed the entire day. I just saw a little bit in the morning, and it was definitely not an early trade. It wasn't a 9:30 day. It was a sit and wait a little kind of day. I'll start at 9:15. No, let's jump straight to 9:30. Start at 9:30 because honestly, I didn't even really look at the market prior to 9:27. I was panicking and scrambling and trying to get my stuff together. I couldn't even log into my prop. Things were not going well, so I didn't even really trade. I tried to get it on paper. It was not looking pretty. I think I said, honestly, I don't remember what it did at this point. Jagged down. It's just not clear, honestly. So maybe jagged down. I said maybe jagged down, plus you have... No, but org is up. The ladder is up. So I think I said drop and pop. Because from here, I'd like to see it come, test these order blocks, maybe even this one too. Grab this liquidity here and see what you can do about this small ladder. Very pedestrian ladder. All right, so let's see what we have here. First thing it did, it rejected. First of all, let's go back. I also didn't look at the fib to see where we are. Let's do that again. All right. Fib has us... My word, this is a lot. Okay. I have to make this wide. Fib has us currently intermediate term. Okay, so I'd like to see it either reject up, come down. Well, I did say come down anyway. Today's Tuesday. I think I saw one or two of the last Tuesdays. There was a gap rejection. One or two of the last 5 or so Tuesdays, there was a gap rejection. So I said maybe I have to keep in mind that Tuesday could be a gap rejection day. It's not a slam dunk gap fill or a slam dunk gap rejection. So I said likelihood of this coming down, but it could fill later. So what do we see? Here, if it comes down, maybe 797, maybe a little lower, but this is then coming out of the range if it comes down any lower, honestly. So the reality is you'd prefer to see it start... Well, no, actually, it's not coming out of the range. It's continuing the trend. So you do want to see it go down, is the point here, because the trend is clearly down with a lot of bearish PD arrays between your first presented fair value gap and your bearish breakaway gaps. So didn't want to see the vacuum in full effect unless prior NYAM was calling it, but by then you should have a brand new NYAM, so that wouldn't be useful anyway. So drop in pop. Let's see what we have. First thing we do, we drop, continue the trend. Honestly, structure alone might have made sense for us to get in immediately, but this long wick is concerning. I'd have to see what the next candle does, especially considering the fact that we came all the way back up here. I get it. These are some strong bullish PD arrays and these bullish order blocks, but let's see what we have. Oh, shoot, before we do that, we have a clear draw of liquidity. So this would be a great area to take a trade to in Asia low. Asia low on top of your 1 minute bullish order block. This could be a nice place for the price to carom off and shoot up. So let's see. In for the short, boom. It came back up here, honestly. It couldn't get higher. Couldn't even get close to the gap. Wouldn't be such a bad thing to take this from candle open 806. Looking for down there. You get 35 points out of that. Problem with that is you couldn't close past any of this, which indicates that you're still either testing it or looking to get bullish. Slightly higher wick is concerning as well. So honestly, you shouldn't be in this trade. If you are in this trade, you have this inside candle here that's of the opposite color and inside the order block. I think it would be a great time to either think about reversing or get out of this trade, because this failed to reach the 50% to reject, but it's just too indecisive for me. I did not like this trade at all. I'm still thinking bearish. Okay, so there we go. Okay, boom, there we go. So it does flip around. Hold on, I went a little bit too fast there. So let's see. What do we have here? This candle came back up, rejected the 50%. So you could have actually stayed in this trade. Would have been fair, but realistically, you would have started to see drawdown if you got it, depending on where you got it. If you couldn't get it on the first candle, realistically, if you got it on the second candle, you start to white knuckle it a little bit, because you came right back to your open, although it does print all the way down here below, at the area of your first two candles. Plus, you just shy of missing Asia low. You come just shy of missing Asia low. Okay. And if you were able to hold, I don't know, there's no reason to get out of this trade. I would trail it though. And you come back up. My goodness. So there's all the more reason why you need to trail this trade. And it does come to Asia low, sweep. Yeah. So that's the answer here. Take this to Asia low, and you can get, how much out of that can you get? 70 points. Decent day. On one big boy contract, it's not so bad. Not the big move we're looking for, but clearly have this sweep of Asia low, and honestly, that would be an opportunity for a turnaround. See if you can take the long. Maybe. Only because it's Asia low and on top superimposed on a bullish order block. That to me would indicate maybe I get in for a long. Otherwise, it did come up to the 50%, and I'm thinking about the rejection, but it did reject 3 times. Maybe we're not rejecting anymore. And you take off. You take off a little bit, actually. You come all the way up to rejecting 37.5% of the opening range gap, and then you start coming back down. Where is that? That looks like a 0.786 rejection on your intermediate term fib. Plus, what is this, midnight and Euro first presented fair value gaps, Euro midnight and Tokyo first presented fair value gaps. This is a strong area. No wonder why we rejected that so heavily. Okay, so that would have been a decent trade, actually, to take that as a sweep of Asia to this area here. And that alone, let's say you got in here, 765 to here. You can get another 60 points out of that. And honestly, you should probably run away for the day, because if you got it like that, you got to get out the casino. You know what I mean? Okay. So what do we have? Then we create a candle that doesn't move really in any direction. It shows the heavy rejection of the area, but it also shows, I see, which is interesting because this is very well. This shows a rejection not only of the 50% on your short term as well as your intermediate term fib, rejection of the 236 in the opposite direction on your long-term fib, which indicate that you're looking for something just a little bit more premium to sink your teeth into. So let's see, where do you go? Up. Oh, indecision. Oh my goodness. Whoa, was I wrong? Cheese and bread. We jumped down. So this is, again, a very high rejectionary area. We can't print above it. Or we do, maybe we create a little mohawk, but largely we don't print above it. I believe there's some fair value gap here that's, my goodness, this is such a strong area. Okay, hence the rejection. Good thing I was not in this, because if you try to take that long, you would have been chopped up. If you try to take the short if you try to stay in the short, you would have been swallowed whole. Let's see. Although you did make a higher low, so technically if you took it from the Asia sweep, you could have still held on to it, but I don't see the point. Oh, shoot, before I do that, let me, yeah, you could have, because this comes down to which area? This comes down to just past the 0.5. All right, what if, because this is intermediate term going down, what about just one more? Does that do anything for us? It doesn't. Okay. Okay, well, there's that. Man, come on. There we go. Alright, so let's say we said intermediate term going down. Long term. Yeah, I see. I would still say that this wants to get something juicier for the long-term fib. Intermediate term, this is OTE right here. This is prime for the down, but coming down here, you know what? Let me just draw a fib manually. I have to figure out how to make this do it for me, but if I were in from, let's call it here to here, what does that fib look like? That's it right there. This is the fib that I needed. This fib shows me that we're rejecting the 786 on this intermediate term area. More prominently at least. So maybe I need a, what do you call this? I need an intermediate term hold to push back to one prior, because that would have been a decent entry for a move that got you about 40 points. But whether or not, I mean, that's not the full move, but it's at least a decent one. Having said that, next, there we go. And we come up, boom, and we finally print past that area, come up to the Sydney first presented fair value gap, which means at this point we are printing past the 50% of the ladder. We reject the 50, we reject, how much is this? We're rejecting 75% of the gap and rejecting this breakaway gap above, which honestly I'd say this is all the reason to get in for the short off of this rejection alone. This candle right here, I would have put my stop over here. Let's see, boom, boom, boom. I would have gotten in on this on the way down. stop in at the gap. I would not like to see this maintain. Hopefully I don't get chopped. There we go, and then we fall. Exactly what I want to see. Do we have an NYAM yet? We don't yet have an NYAM. And we're getting into the macro. So what does that tell us? Oh my goodness, that would have eaten me up whole. Wow. Well, clearly that's why you don't do that. Wow. Okay, let's try to read this on fib instead of feel. Because the reality is this was dangerous. I'm glad I didn't get chopped up in this today. This is dangerous. Tuesday, baby, Tuesday. Okay, so I did say I wanted to see it come deeper into premium. I didn't think it had the strength to break these breakaway gaps. So let's see. 2, 3, 6. Okay. One candle. Okay, so we get stuck here, which indicates to us that we're still bullish. This is a very strong area, and if it flipped bullish, that should tell us something. Having said that, that breakaway gap, no, it wasn't the breakaway gap that did that. It was the not being able to print past Sydney that did that, which indicated to us that Sydney still had some power left in it. Okay, we did not print past the gap low, which is extremely concerning. Plus, we're at the 786 of our short-term fib. We're at the although the intermediate term fib would have fooled us. Honestly, yeah, well, I do have a short term here, so that's sufficient. Okay, I'll have to think about that, because this would have been sufficient for the continuation to the upside, but the problem is this right here. Oh no, that's exactly what it did. That was perfect. Well, that was perfect, but then the next problem is this. We invalidate that breakaway gap. We look for NYPM, so the vacuum was in full effect. And then what happens? We struggle to print to the top side, to the north of the gap. We don't print past the gap. We wick into NYPM and this bearish breakaway gap above, which is, yeah, I'm not worried about that. We create a little mohawk past the NYPM, still wicking. So this breakaway gap is still very strong. Not to mention, we already printed past the 0.5 on the long-term fib, aiming at 618. We start to reject again. We're still the same rejection. This might be a reason to get down. Keep in mind, it's a macro time, literally perfect. 950, 951, rejection, and then you get in here. This is actually ideal. If you could wait literally for this, I mean, there's a way to get in. There's a way to get in for this, but this wasn't juicy. There's a way to get in for the Asia sweep. You get in for the Asia sweep. If that wick wasn't too quick, you get in for the 765. You get 100 points all the way up to here if you put your stop all the way up there. But holding that, if you got in with a good get in, 765 to 884 is your 120 points for the day. But you have to, I mean, honestly, I didn't know the vacuum was going to turn on. I should have seen that the vacuum was turning on once I realized that this area was so strong. So I guess vroom vroom. Yeah, I don't trust that to go back up. Oh, it does. Oh, it does go back up. Creates a higher high, still during the macro. But, oh, and that would have taken me out. Because Okay, so the answer here is if you get in here, you have to put your stop above the fair value gap, above this breakaway gap. Although it does literally wick right to the 618 on the long-term fib, which is so perfect. You can't get much better than that. 618 on the long-term fib. The only way it could get better is if it came all the way up to the 786, but it had literally no reason to do that, considering the proximity to your NYPM first presented fair value gap from the prior day. So you take this from the rejection of the 618 on that, and you melt. Let's see if you get in. Actually, let's go back just a little bit because I want to see what this fib looked like here. This looks like a 0.5 rejection on the short term. So the thing is, this also looks like a 0.236 on the, although it rejected a few times on the 0.236. So that makes it less of a strong area. Although it rejected 3 times on the 0.5, but under different circumstances, considering that this is a short term. And then you'd want to see it come and test the 786 on a shorter term fib anyway. So, I mean, it is also creating lower lows. So that tells us things that we want to know anyway. Let's see. What does this look like? Again, the 618 on the long term, man, that's just too juicy right there. So I'm thinking, since this was the Judas swing, you want to take this in the opposite direction, especially considering you needed to sweep this liquidity from the Asia low with the superimposed order block. You take that, oh, come on. Okay, you take that up. Sorry, that would not have been the Judas swing. This would have been the Judas swing. So if this is your Judas swing, this would be your first distribution to the downside at the rejection of the 618 and the rejection of that breakaway gap and the rejection of that NYPM first presented. And let's see what happens from here. Yeah, you just melty. You have yourself a nice little OTE to come back to the upside. And do you even make it? No, this is your second distribution here. Get in. This is more like a 1.5. Just keep falling from here. You cheese and bread. Yeah. Honestly, I could have held here because this. I don't know that I heard Tim calling this a protected high. I don't know that I feel that. I guess on a lower time frame it might have been because you have the 2-bar rejection. I don't know. I don't know. Maybe I think he said he saw a BPR. Here's your BPR. Why was this count as a BPR? Oh, because the BPR started here. No, because that's not a BPR either. That's not a fair value gap, so how would that be a BPR? I don't get it. But this makes it a protected high, which means that if you were in here or you're able to get in here, even if you get in here, you're still golden because it's got a melty after that. Let's see, 880. Yeah, and you're already up 100 points. Honestly, I'd probably trail it after this. No, I'd trail it from here because that's doing the right thing. And then you create a breakaway gap on top of this order block, which is extremely interesting because it indicates to me that that order block is toast. And it might be a great, oh wow, okay, that is scary because you wicked right through that. And if I had put my stop here, it would have been done for the day. But gee whiz, the market dumped. You could take it literally. Previous day 50 was generally a good rejectionary area. So then you could expect it to go back up. But in this case, you just barely miss that breakaway gap and you just keep going back down. And then you invalidate that. You know what? I'm done. Because there were so many opportunities to be in this trade, but I wasn't available. So that's your Tuesday.